Hey Bowtie Nation, Joseph Hogue here with your weekly stock market update, 9 a.m. Eastern every Monday morning with the stocks to watch and the stock market news you need to see. And Nation, I highlighted 4 stocks in June in which Nvidia was amassing a $600 million investment into the companies as Nvidia builds a cash hoard it needs to deploy. One of those stocks is now up 78% in the 5-month period, and more than just the return, the investments serve another purpose for Nvidia. Just this month, the company is out with another updated disclosure and 2 more stocks it's buying. I'm going to highlight those 7 stocks to buy before Nvidia buys them, along with important updates to Dell Technologies, SMCI, and what could be the most underestimated opportunity after the election. But first, investors are loving options investing, with nearly 40 million contracts traded every single day to boost their returns. But most investors are doing it wrong, losing over $5 billion a year. That's why I'm relaunching my Ultimate Options course. Over 3 hours of video, I start you with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly what to expect. And right now, I'm relaunching the course at a 38% discount. Save $150 off, but only over the next 3 days. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code in the link I'll leave in the description below, so look for that link or scan the QR code here. Nvidia results were the big news last week, and they did not disappoint. The company reported revenue up 94% from a year ago and up 17% just from the prior quarter. It's now estimated that Nvidia accelerators control as much as 95% of the market share for AI chips. It is total market domination in the biggest growth market of the decade. But now, in kind of a tragedy of success, Nvidia is facing dual problems that nobody wants to talk about: an exploding cash reserve and the cyclicality of the semiconductor industry. The company grew its balance sheet cash to $38 billion in the quarter through September. That's up 48% from the $26 billion in January. And that's even after investing $13 billion back into the business, using another $32 billion for stock repurchases and paying down other financing. Nvidia is a cash machine. It's having trouble putting all that money to work. Also, while we're in a super cycle now, Nvidia knows that the market for semiconductors is extremely cyclical. From inventory buildup to changes in just global economic growth, revenue for the industry ebbs and flows as shown here in data from 2005 through 2019. Double-digit growth over a few years is always followed by single-digit and even negative growth in others. And now while this AI supercycle for chips is likely to last longer than previous cycles, Nvidia knows that all good things can come to an end. Fortunately for it and investors, it's found a solution to both of these problems: investing in other companies. I highlighted 4 companies Nvidia was buying in June, stocks the company has invested over $600 million in, and why Nvidia might be buying them. And not only have some of these produced a great return on the company's investment, but it also opens the door to an acquisition further down the road. It also helps nurture the AI ecosystem, helping companies to grow that are using Nvidia chips, so it's kind of a virtuous cycle for the chipmaker. And we know all this, which companies Nvidia is buying, because every company or large institutional investor is required to file a Form 13F with the Securities and Exchange Commission, the SEC, disclosing their investments in publicly traded stocks. Now, that disclosure is meant to help the SEC head off any possible stock price manipulation by hedge funds and other big money players, but it can also be used for investors to jump in on those investments ahead of an acquisition or just a bump in the share price. And you can always find these 13F filings by going to the SEC EDGAR database online and searching for the company name, then clicking through to wherever you see the most recent 13F report for a list of those investments. I highlighted 4 of those Nvidia investments in June, with the stocks up as much as 78% since. Now Nvidia is back with an updated 13F just filed this month, adding 2 stocks and selling out of one of them. I'll update on those previous 4 investments, then highlight the new stocks Nvidia is buying. ARM Holdings, ticker ARM, is Nvidia's largest investment with over 1.9 million shares, worth over $263 million. Shares are up 11.6% just since that June video, and jumping 128% in the last year. ARM designs microprocessor architecture, really the blueprint for semiconductor chips, which are the brains of any electronic device. It then licenses out these blueprints out to chip makers like Nvidia, AMD, and Intel to create their semiconductors, so this is a critical piece of the chip supply system. Seeing that potential in this then, Nvidia actually tried to acquire the entire company in 2020, reaching an agreement with SoftBank to buy ARM for $40 billion before the FTC stepped in to stop the acquisition. Nvidia still wanted a foothold in that supplier though, so picked up those 1.9 million shares, which have more than doubled since the IPO. One of the smallest stocks here at just $374 million market cap is NanoX Imaging, ticker NNOX, with Nvidia buying just under 60,000 shares, worth $381,000, or about 1% of the company. NanoX runs its digital imaging system with an AI-based suite of algorithms to augment routine CT imaging, helping to find early signs of chronic diseases. The company has a current approval with the FDA and is submitted with the EU. It's building out its sales and distribution department, but this is still a very early stage company with just $110 million in revenue, and over the past year, it's still negative on profits. Their shares are down 18% since Nvidia's June 13F report, but are managing to hold up with a 3.6% return over the year. Of those four original investments, Recursion Pharmaceuticals, ticker RXRX, is down the most, down 26% since June, with Nvidia owning 7.7 million shares, worth $45 million of the $2 billion company. Recursion is leading in the race to decode biology with its language model to perform those complex drug discovery tasks using artificial intelligence. Like most biotech stocks, the potential is there, but it comes in fits and starts when the company announces a breakthrough or an FDA approval or a deal with another company. Revenue is expected up 57% this year, though, followed by 9% next, but this can turn fast with just one discovery. SoundHound AI, ticker SOUN, is the runaway here, with Nvidia's 1.7 million shares worth $14.3 million, an investment it just announced last February. Shares are up 78% since that June video, and up 49% on my average cost buying it just since this year. I've highlighted SoundHound a lot on the channel as one of my favorite next wave plays on artificial intelligence. The company is a leader in that conversational AI to businesses that can be used to build an AI assistant in 25 languages. The shares popped 50% on a single day in July when it was reported the company's voice assistant would be used across Alfa Romeo and Citroën vehicles across Europe. It's also being used in Apavia call centers, where it's been found to produce a 20% increase in productivity. SoundHound is the clear leader in what could be one of the biggest areas of AI, those voice assistants, and it's showing through in that kind of growth that we want to see in a penny stock. Expectations are for 80% growth this year and next to $152 million in sales. But now Nvidia is out with a new 13F disclosure, stocks it owns through the third quarter, and just published here November 14th. You can see it hasn't made any changes to the ownership of those four previous stocks we highlighted, but has added two others. Nvidia now also owns 7.7 million shares of Applied Digital, ticker APLD, worth $75 million, or about 3.5% ownership of the company, with shares of that digital infrastructure and cloud provider up 118% in the past year. Now, Applied is at the heart of the next wave of AI, that data center build-out. The company develops, builds, and operates data centers and cloud infrastructure with a focus to those specific needs for accelerated computing in AI. So you can see why Nvidia would want to be involved in that. Data centers look to be the next big bottleneck for AI revolution after supplying those chips, just having enough power and the data centers to process it all. And one really interesting development I've been following has been the transition from blockchain data centers to those needed for the AI operations. As the Bitcoin halving continues and profitability for mining decreases, we're seeing those data centers repurposed for that high-performance computing, and I think Applied is positioned to do that with its existing blockchain infrastructure. And while it's not quite a penny stock, it is the growth we like to see, with 50% plus revenue growth expected this year and next. And while it's still posting negative earnings, it's got all the financial backing it needs to grow. Nvidia also disclosed a 3.7 million share position in Serve Robotics, ticker SERV, worth $31.6 million. This is really interesting on 2 points. First, because that means Nvidia owns 8.4% of the outstanding shares of this company, by far its largest position by ownership. Also, though, is because Nvidia was an early investor into the company, putting up $10 million in 2022. That prior investment was worth $17 million when Serve issued shares in an IPO this year, but the investment disappeared from Nvidia's 13F report. Now, whether some of these shares were held onto after that or whether it's a totally new investment, Nvidia is still backing the company. Serve Robotics spun out of Uber in 2021 and is the leader in sidewalk delivery robots, a market it says it could be worth $450 billion by 2030. Uber is still a major company with a multi-year contract for 2,000 delivery robots to be operating by the end of next year, and it's already completed tens of thousands of deliveries for Uber Eats, 7-Eleven, and other customers. And one overlooked upside here could be its lead in that autonomous vehicle software, one of the few to reach level 4 autonomy. That intellectual property and the potential to reach level 5 autonomy isn't just valuable to the company in its main business, but in other applications that could become a revenue source for Serve. And not on the company's 13F filing, though, is its biggest investment, in shares of Nvidia itself. Nvidia released in August its plan to buy back up to $50 billion in shares, and while the stock has struggled lately, and I do believe those year-over-year comparables start to get much harder, you can't deny the company's dominance in artificial intelligence. Rumors had been building about further delays in the Blackwell chip, but Nvidia addressed that in its earnings call, saying the chips aren't just shipping, they're already in the hands of some major partners. So while growth is only expected 49% higher over the next year versus doubling this year, it's still an amazing pace and will allow those shares to grow into its valuation. Looking at the stocks I'm watching this week, CrowdStrike Holdings, ticker CRWD, is going to be reporting its earnings on Tuesday, with investors anxious for updates on that fallout after the July outage. While the shares have rebounded 71% from the sell-off low, there's still apprehension for the potential to slower revenue growth and litigation. Expectations are for flat earnings on 25% revenue growth from last year, with full-year growth of 27% and 22% in sales this year and next. Now, earnings have been a mixed bag for competitors, with Fortinet surging 16% on its report, while Palo Alto Networks fell as much as 5.5% before clawing back some of its post-earnings loss. I do own 300 shares of CrowdStrike along with Zscalers, ZS, and Palo Alto Networks, and would be buying more on any significant dips, as this cybersecurity theme is really my favorite growth play over the next decade. Dell Technologies, ticker DELL, can be reporting its earnings on Tuesday. It's going to be an important read on the data center build-out theme, as well as for shares of Supermicro Computer, ticker SMCI. As a competitor in that server and data center hardware solutions theme, Dell has the most to gain from any troubles at SMCI, and has been rumored to be getting business from those worried SMCI customers. There may be a grain of truth to these rumors, though not enough to really dent SMCI revenue considerably. I am buying shares of Dell, though, for its potential in that data center theme, but the fact that it's not that pure play in data centers that you get with SMCI means upside is going to be more muted. Humana, ticker HUM, could be the biggest beneficiary within the most underestimated change with the incoming Trump administration. Whereas President Biden focused his term on increasing regulation and lowering government payments to the Medicare Advantage programs, President-elect Trump campaigned on growing membership to the government-sponsored insurance, along with talking it up as an alternative to government health care. Now, Dr. Mehmet Oz, Trump's nominee to run the Centers for Medicare and Medicaid Services, the CMS, which oversees one of the largest budgets in the federal government, including those Medicare Advantage payments, he's also been a vocal supporter of MA on his talk show, as well as during his run for the Senate. Humana, as the most pure-play stock in that Medicare Advantage theme, is up 16% since the election, but that's nothing compared to the potential as these plans for change start rolling out early next year. Even with the post-election bump, shares of Humana are still down 12% over the last 5 years, encompassing that Biden administration. Now, I'm preparing a full video on this, but other potential winners here include Centene, CVS Health, and United Health on the theme. Giving you that bigger picture idea here with the SectorSpiders.com sector tracker, all 11 stock sectors closed higher last week, with surprisingly similar returns across the market. Now, this was the biggest undiscovered theme of the week, the broad health of that rally. While it's been almost exclusively the big tech names that have dragged the bull market along for the last couple of years, last week it was the other 493 stocks in the S&P 500 index. While the Magnificent Seven group of tech stocks have stalled out, only up 1.5% over the week, the Invesco Equal Weight S&P 500 ETF, the ticker RSP, was up 2.2% last week. So it's a very good sign that even a slowdown in the fantastic returns of those big tech companies cannot hold back the enthusiasm for the rest of the market. Looking at a bigger trend here, 3 weeks after the election, we see a clear trend in the sectors the market expects to do best over the next year, with energy up 7.74%, financials up 7.6%, and communication services up 6.5%, all easily beating the 2% gain in the overall market. Looking at valuations, though, stocks and financials are trading at a premium of 30% over the long-term price-to-earnings ratio, with those in communication services 15% more expensive than that long-term average. In fact, it's only energy and real estate stocks, really the only two trading at a discount to their long-term valuation multiples, and and present really the best opportunity for value investors. Of note here, it would appear that consumer discretionary stocks are also booming post-election, but this is all due to the 61% surge in shares of Tesla, which is about 18% weight of the sector. Without Tesla, the sector would be posting a slightly negative return over the last month. Get your $150 discount and everything you need to start investing in options, including the Strategy Finder, the one-of-a-kind options calculator, and that 14-day money-back guarantee. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.